Last week was a pretty interesting week. We got a decent sized pullback across the indices in the market. And if you are a paying member, I have been pointing out for weeks that the way this rally was going, this recovery rally, it was worrying me in a way because when things go up this fast, usually they don't end up in a good place. So I was expecting some kind of a pullback, and not expecting it, in fact, hoping for a pullback around the 200-day SMA, and we did get that. The only problem is that whenever you get pullbacks, even though you are expecting, they bring uncertainty with them. So you are never sure that is this pullback done? Is it going? Uh, do Are we going to have a deeper pullback, or is the market completely changing direction? So let's try to answer those questions based on what the markets are telling us. First, a quick brief on what's happening at the macroeconomic level next week. So it's a short week. Friday market is closed because of Good Friday. So we have 4 days, and we have the usual slew of economic data coming in. We have a bunch of Fed presidents speaking, which I've highlighted in blue. And the most important thing, economic data for me at least, is on Tuesday, which is the CPI data, which reflects uh, inflation. So CPI data is very important. Um, then we have the jobless claims on Thursday, and then we have earnings season starting next week with the big banks reporting earnings on Wednesday and Thursday. So that's as far as the planned events for next week. And then, of course, we have that Ukraine war, which is the wild card, always the wild card. Anything can happen on that front. Now, as far as earnings are concerned, so I have highlighted for you the stocks that we trade, which are part of our watch list, which are reporting earnings next week. We have some interesting set of stocks reporting: JP Morgan, BlackRock, First Republic, Goldman Sachs, um, PNC, UNH. All of these are in our watch list. So we'll see if we can find some trade setups next week after the earnings have been reported. We don't do pre-earnings trades, but we do a lot of post-earnings trade. So we'll see if we can find some good setups. Now the following week gets even more interesting with Netflix and Tesla reporting, and Netflix and Tesla will have an effect on S&P 500 and Nasdaq. So things will keep getting interesting as the earnings season starts rolling by. Now let's talk about the macro level outlook of the market. For a few months, I've been covering either QQQ, SPY, or DIA each week to when I talk about the market outlook, because they have been moving in sync. Now this week, something interesting has happened, and we are seeing some divergence between the tech sector and Dow Jones. So I'll touch on that in a bit. But let's first talk about VIX real quick. So if you are a member of our group, you must know we pay very close attention to VIX. VIX levels below 18, which we haven't gone there in months. It just never gets there. VIX levels below 18 is the only level where we can expect a bull rally to continue, or even the thoughts of testing previous highs or taking out new highs. So those scenarios will only come into play once VIX starts dropping below 18. Now, since that hasn't happened, and we have been in this area above 2024 is the area which represents correction, and this is pretty much what happened in the last 3 months. And now we are in this zone, which is chop city. So as long as we are between 24 and 18, or I'll not give any credibility to any kind of rallies that happen. Few up days followed by few down days, it'll just keep happening. And because of that, the way we've been trading in our group is we are not like overly bullish or bearish on the market. We have been splitting our trades with 50% trades, bearish trades, and 50% bullish trades. And that has been working out pretty good for several weeks now. So that's where we are as far as VIX is concerned. Now let's move on to SPY. So last week, the entire market sold off almost the whole week, which was a good thing. Now, what is SPY telling us? With S&P 500, so this is the 3 months. This is the correction that we just experienced. And then from March 15th, we had this massive recovery rally. This is clearly not a dead cat bounce. It's a rally which has legs. And this is the region which I have been pointing out to our members for weeks that uh, I, ex- I expect and I hope that we get a pullback here, because the way this rally is going, it looks unsustainable to me. And we did get that pullback. And when we got that pullback, I pointed out that 440 is that support level where we don't want to break the support. And if we just bounce off of this support, then expect this market to continue its upward trajectory. And what SPY has shown us last week is it fell down, but for the last 3 days, it's putting in higher highs and higher lows with a bunch of dojis thrown in. So there is no clear direction, frankly speaking, in SPY, and that's why I have pointed out in this our market outlook that we'll know by Tuesday market close where this market wants to go. If we continue this momentum up, that's a good thing, because then we can say, the pullback is behind us. It was healthy. We can expect the markets to continue up. But if we start breaking down from here and we take out 440 support, we could be in for more pain, because once 440 breaks, we are looking for bearish scenarios start developing with the markets falling further. Now, Dow Jones or DIA has a completely different story. It's looking the strongest amongst all the indices, and after we got this pullback, it has reversed course. It's clearly showing us a direction which is to the upside, higher highs, higher lows, no dojis, all green bars. And I my expectation is that with interest rate hikes benefiting financial institutions, the earnings that we'll see next week is only going to lift Dow Jones higher. Finally, let's talk about QQQ, or the tech sector, which is the most concerning. QQQ is starting to show some divergence. It's not for the last 3 months. All three market indices have been moving in lockstep with each other. Same pattern, same correction, same fierce recovery rally, and then the pullback. But the tech sector is not showing any signs of a recovery here. This pullback is continuing, and that's why I said that we need to wait till Tuesday to see if the Qs can reverse direction, and that will be a good thing. If the Qs continue going down, and there are many reasons for the tech sector to not go up, the rising interest rates, the 10-year treasury yields, which I've shown here, spiking up like crazy. Uh, there are many reasons for the tech sector not to go up. So just keep a close eye on what's happening here. If you remember last year, in two of the corrections in last year, I remember the most recent one being in September, Dow Jones was looking really strong and was making new highs, and the Qs were the ones which started showing weakness in the beginning. Then that carried over to SPY, and then finally it took down the entire market with it. So Dow, SPY, Qs, everything got dragged down, and we got a bad correction in September. So just keep an eye on that, because one sector falling apart like this can easily carry over to other sectors. Finally, Bitcoin. So we don't trade Bitcoin in our group, but we do trade stocks related to Bitcoin like MSTR and Coin. And since Bitcoin has been in this downward trajectory for months, we have actually stopped taking trades on Bitcoin or crypto related stocks. Now, this Bitcoin's bear territory ended right here around 30K, which is strong support for Bitcoin, and it has been chopping around. And I've been pointing out to our members for weeks that it needs to take out this level 48K for us to declare that Bitcoin and cryptocurrencies are now entering a new bull cycle. So I'm keeping a close watch on that. It did briefly take that level out 2 weeks ago, but then last week the entire market pulled back, so it's back down to 42K. So just keep an eye on that. If Bitcoin reverses from here and makes another attempt to take out 48K, that could be a good sign um, as far as a risk on sentiment is concerned in the market, and also if you trade uh, cryptocurrencies or crypto related stocks. But let's talk about the key takeaways. So, as long as we stay in Chop City, which is where we are right now, keep your portfolio balanced between bullish and bearish trades. If you are a member, you must have noticed that I'm trying really hard to keep 50% bullish and 50% bearish trades, and that has worked out really nicely for the last many weeks. Um, Weakness in QQQ is looking scary, so pay close attention to what the Qs are doing, as it could carry over to the rest of the market. So by Tuesday, we should have a decent picture of where the market wants to go. Wednesday and Thursday, the big banks and financial institutions are reporting earnings. So that will be significant for the Dow Jones and the rest of the market. And Friday, markets are closed. So that concludes the market outlook for this week. We'll see you next week. You can also visit us on 25koptionschallenge.com for more information.